Thank you very much. Good evening, everybody. So just to take one step back, and as O'Brien said, we came up with this concept. We're playing with how to deliver interesting content and value. And so we started talking about, well, what sectors are there that we need to focus on, and where can we make some money, or look at it from a sector perspective to see whether or not there's some interesting plays, short term, midterm, long term. And we obviously came up with a bunch of them, but in conversation with Dana, one of our members, Dana Shapiro, who joined us about 2 months ago, give or take, I think, Dana.
Month, yeah.
Yep, she has done an amazing amount of research in the electronic vehicle marketplace, and I'll let you tell everybody just a little bit about yourself in terms of your investing background, albeit in the option marketplace. We know that you're new to options, which is awesome, but you have done an incredible level of research in this marketplace. And I will tell you guys on the call that when Dana was considering joining the trading club and the mentor program, I think she will take the award for asking more questions about what we do and how we do it before she decided to join. So she's very, very thorough in her way of looking at things. So Dana, I'm going to put your PowerPoint up so we can all look at that. O'Brien, I'm going to take the screen from you for just a little bit. And Dana, tell everybody just a little bit about yourself and why you decided the electronic vehicle marketplace might be an interesting place to play.
Sure. I was a beginning investor, and I had Tesla stock starting this summer, and I watched it. As I watched its path in amazement, I was asking, what about all the things that need to support the cars, like the batteries and the materials for the batteries? I was genuinely interested in the rest of the industry, since Tesla is over amplified, or in my opinion. Or actually it's a fact. So we call this, I'm calling this the electrification decade. It's a quote from a CEO of one of the companies that we're going to talk about. The electrification decade, this decade, is, I'm going to start with Cathie Wood and Janet Yellen. So yesterday, Janet Yellen was in a hearing for her nomination as Treasury Secretary, and she said that the new administration wants a robust electric vehicle market and supports restoring electric vehicle incentives, meaning to individual and business buyers. And so this market that is, you'll see on the coming slides, is so extremely popular, is going to get even perhaps much more popular. And so in my research, I came across Cathie Wood, a visionary, very futuristic looking CEO of ARK Investments. They have $15 billion in managed funds. And she went even further than talking about electric. She is betting on or focusing on autonomous electric. She goes so far as to say that many industries are going to be completely harmed by not just electric vehicles, but autonomous electric vehicles. All the trucking companies, robo-taxis, and so on. But that, I don't feel like that's this decade, but I could be wrong. It feels like that would be the next decade, perhaps.
Dana, let me jump in here real quick and tell those that just jumped on. We're going to talk a little bit. We're going to be very conversational with you, O'Brien and myself, during your formal presentation, which will last 10, 15, 20 minutes, and then everybody will have an opportunity to make comments, recommendations, trade ideas, thoughts, questions. So if you end up having a question, just hold it towards kind of the middle to the end of this so that Dana can get through kind of building the case for the electronic vehicle marketplace and some of these underlying positions. Sorry to interrupt, but I wanted to kind of set the cadence for everybody. Go ahead, Dana.
Yeah, I was probably talking too long in the start there. And I might be speaking a little bit fast so I can get through everything at a clip. Can we go to the next slide?
You bet.
This second slide comes from Ernie, and it is perfectly proving what I'm talking about. This shows that in an 8-year period, from 2019 to 2027, the growth in these 3 areas, battery electric vehicles, hybrid and plug-in hybrid electric vehicles, 2019 in orange, 2027 in blue, shows a massive amount of expected growth in just 8 years. And the players at the bottom here, these car companies are all involved: Tesla, BMW, Nissan, Toyota, Volkswagen, GM, Daimler, Energic, BYD company, Ford, and others. There's NIO. We've talked about NIO as well, Chinese, and there are other Chinese makers as well. Can we go to the next slide?
Yeah, and as we do, I might make a comment about the disruption concept here. I am aware in some research that I did a while ago about Tesla, they're already planning to sell their cars with a bundled insurance program built into it. So if you don't think the other manufacturers are thinking about it the same way, there's an industry that could be well disrupted in this process. So there you go. Go ahead.
Wow. Wow. Okay, terrific. So this third slide, I had been like broadly researching, looking at companies in the battery technology, the mining companies. So trying to look at beyond just car companies, and also the charging stations, all the things that need to work together, absolutely need to work together. So when I saw these charts small like this, I saw that, and these are 90% of the charts that I found, that I clipped. They're all showing this upward trajectory. And so that's why I've got this slide here. And so that brings up the question for me of a bubble. Where there's got to be a bubble in here somewhere, I'm thinking. Where is the bubble? When is the bubble? To whom is the bubble? And this goes back to a quote from the first slide. You don't have to go to the first slide. I'll just read the quote. It comes from a financial news source called Benzinga, who I don't know well. It says, shorting stocks that are caught in a bubble can be extremely dangerous, given that irrational exuberance can last for years, and the ultimate top is only reached once investor enthusiasm has died down. So I was wondering, should I sell the Tesla, and so on, and this idea of the bubble, and then this quote is saying that this bubble could go on for a very long time, and with the new administration, that could be true. Who knows? Next slide.
We've seen irrational exuberance in some of the underlying core positions we trade as well. So that's a consistent statement on bubbles.
Right. And so some essential ideas, and I guess I'll just start at the bottom with the Tesla, with the visual. Just to point out that in 2019, to give perspective, Tesla car sales was 0.4% of all car sales of the 90 million cars sold. And I apologize because I don't know if that's a worldwide figure or what region that covers. But not even 0.5% is Tesla, just for perspective. Also, in terms of batteries, without batteries, we have no EV industry. And so we need the materials for the batteries and the technology to improve for these batteries as well. Obtaining the raw materials, I found out, is fraught. There are geopolitical issues, extractability problems, mining unsustainability of mining practice problems, and abundance of the materials where you would want them to be on the planet. is sometimes an issue. So keep in mind, I was looking, I mean, not I was looking for battery companies, but this made me realize that we're going to need battery recyclers. Not recycling car batteries in the future is not an option. So look for car battery recycling companies, because they're going to be critical if we want to transition from oil to electric.
Cool. Very cool.
Yeah. And so here are the 5 stocks that we'll cover in one way or another tonight. Romeo Power is battery technology, an example from the battery technology segment. Blink is a charging equipment charging equipment stations, and ChargePoint is a much larger competitor to Blink in terms of market share. GM, we know, is a huge automaker, and there's a brand new ETF started in December. It's called SPAC and New Issue. So those 5 is what we'll try to cover in one way or another. And the
your original thesis, as you stated, Dana, was that it sounded like you were bullish, but in the short term you might be bearish because of a bubble concept. So as you sit here today with just these 5, are you wanting to invest for the long term? Are you trying to make money in the short term? What's your window here in terms of just your opinion and your thought?
Well, so I'm new to this club. Been here for 1 month, and definitely new to options trading. And so I'm not a trader yet. And so I had the mindset a bit more of an investor.
Okay.
But the Romeo Power will be interesting in the next slides when you see the chart and when you see the way it has dropped.
You want to go to
And
that one? Are you ready to go there?
sure.
Okay.
Oh, there it is. Okay. So go one more slide. I'm actually going to skip right to the visual for Romeo. Romeo Power is a battery technology company. And so I'll start with the chart and then go back to the details of why I like Romeo. But this is showing that it was flat for many months. This is a 1-year chart. It was flat for many months, and it's shot up right after the November 3rd election. And it went up from 0 to 250%. And then when they announced they were being acquired by a SPAC, which is, by the way, a special purpose acquisition corporation, like a shell company which acquires another company and takes it public much quicker than a normal IPO timeframe. When Romeo announced that it was being acquired by a SPAC so that it could be traded, it plummeted from 250 to 100%. I caught sight of Romeo through Jim Cramer. Yes, I am a fan. And he believes that the stock will go up again, and so do I. And here's the reason why. If we go back to the slide right before this one, just above this one, is that what sticks out, I think, the most to me here is Republic Services has partnered with and invested in Romeo, as has Borg Warner, who I don't know much about. They're an auto parts manufacturer, but Republic Services is the 2nd largest North American waste hauler, garbage trucks company. They want to electrify 16,000 trucks, and Romeo hopes to electrify some or all of them. And that's a big deal, I think. The other thing that I love is that they are working on a recycling business. It was hard for me to find anyone who was talking about recycling the batteries, but the batteries are about to need recycling, the ones that we have, so that we can mine less. So they're working on that, and they're going to make announcements on partnerships in this year. And they make an energy dense lithium ion module that you would put into the battery. And their goal is enormous, 500 miles on a single battery charge, which I think would be, I have a Honda SUV, would be more than 2 tanks full. So that would be a total game changer. That's why I would be very bullish on Romeo Power.
Cool.
Yeah, despite
Great.
them being combined with a SPAC.
Cool. Interesting. Very interesting. Never even heard of them.
Hmm.
Okay. How about the next couple?
So, and then Blank Charging Company and ChargePoint are just two companies of six, actually, who are providing charging stations to that which need to proliferate across the United States. And they both sell home chargers. And so
Are they
charge.
ubiquitous? Are all these ubiquitous to all different manufacturer electric cars like Tesla, GM, Honda? Do they all have the same port,
Uh,
if you will?
I don't know anything about that, but from the very little that I skimmed, it looks like there are adapters that enable all the cars to use either one,
Gotcha.
at least through an adapter.
Cool.
Um, yeah, and so ChargePoint has 73% of the market, and there are five others that have, if I guess we'll jump to the next slide and then back. On the
Yep.
bottom, yeah, on the bottom of this slide, we can see that ChargePoint is the orange, and the other five have barely anything. So ChargePoint is most definitely the leader, and they were also acquired by a SPAC. So Blink has 8%. But Blink caught my attention because they were talking about the stock is probably overvalued and it more of a bubble than other stock. And so I paid a bit of attention to that. And I feel that personally, it's just my opinion. I feel that as well. Blink is $47, ChargePoint is 41. I know there's a lot of factors that go into pricing a stock, but it seems that their price might be very bubblish poised. Their charts for Blink and ChargePoint look similar, but
Identical. Identical.
yeah, ChargePoint looks to be a little more robust, but yeah, they're similar, and their rise when they began to rise is also right after the election. So that might be an emotional, investment due to sentiment, or not just emotional, but due to belief in what an administration is going to focus on.
Yeah, so
Uh,
full disclosure to the team here. I have a couple trades in on Blink right now, and I'll show you one that I still like. There's a little background on them recently on January the 6th. I know nothing about ChargePoint. On January the 6th, the Blink put a press release out that they were out to raise a couple $100 million at $41 a share. That was on the 6th of January. On the 12th of January, they actually closed and raised that money at $41 a share. Stocks trading at 47. So there is so much controversy about whether or not it's overvalued and undervalued. It's just an interesting risk play right now. Sorry to
okay,
interrupt, Dana, but I just wanted to keep the
great.
conversational going.
That was great. That was great.
Where shall we
Um,
go next?
so sure. Let me go back maybe to the slide before that. Yeah, go back to the slide before this, just to point out just a bit about these two companies. They both have pros. ChargePoint is a California company. California has just passed they've committed to a goal of zero emissions new vehicle sales by 2035 for passenger cars, and 1.5 billion will go to that goal. So that's good for that state, and they're in that state. And their home charger, though, is more expensive than Blink's. It was $650, and now it's $700 on Amazon. Blink's is $400 on Amazon, and from what I can see or tell, they charge faster. 65 miles per can be charged in an hour's time versus 37 with ChargePoint. Of course, if you have a home charger, you don't care. It's charging while you sleep. But Um,
I guess if you're on the road, you care a lot about where you plug in because you want to get going faster.
This is true. And so that brings me to the point, yeah, that brings me to emphasize that Blink has 23,000 charging stations in concentrated in parts of California, Arizona, Oregon, Washington State, Tennessee, Georgia, and New York. And ChargePoint has many, many more at 121,000. I don't know where they are around the country. But I do know that there's room for, and we need more companies. It's like, oh, well, we have Shell now and we have Exxon Mobil, but we also have room for BP and Marathon and Citgo and the other companies. So yeah, we need more of everything, it seems, to really electrify, to turn the corner toward electrification and away from oil.
Interesting. It could be an interesting real estate play somewhere along the path of somebody coming up with places to repurpose the real estate that's not being used like it
Oh,
was into charging stations around the country. Interesting.
yeah,
And having
absolutely.
something for
Agree.
you to
Are
do
you?
while you're charging.
Oh, Dana, the other Dana had a comment. Go ahead, Dana.
Well, yeah, and that same thing, it would be like a rest stop because you'd have to have something to do for the hour while you're charging.
Right. Very good point. Cool.
That is. I can now I'm envisioning Starbucks doing the
Yeah,
charging
there you
stations.
go. It's very possible.
Yeah.
Oh, you want to go here? Or you want to stay? Where? Tell me where to
No,
go.
let's go to GM now. So GM, of all these car companies that are now focused, as Ernie's slide pointed out, GM caught my attention because for the first time in their history, they want to invest more in electric than in gas vehicles. That's incredible. And so it says they're all in on the electric market, and they have the audacious goal to have 40% of their US cars to be electric in only 5 years. I think that's a big deal. They also have a self-driving vehicle startup, which I guess we could look to that as a future stock called Cruise, a driverless, to be valued at a whopping $30 billion. And Microsoft recently partnered with GM. I don't know why. I mean, I just don't know the technicalities of the technology that they want to do. Microsoft also partnered with Honda to perhaps do similar. And so I stuck GM's 3-year chart and their 6-month chart. I like the 6-month chart. It's a gradual rise instead of an all of a sudden upshot.
Although it had a nice little run here in the last couple
Oh,
60
right.
days.
That is
Yeah,
true. But yeah, you got.
very cool.
Yeah. And now for the final one, which is, I have to say that I'm not sure this qualifies for the electric vehicle market because I don't know why I thought this was an electric vehicle SPAC ETF, but I think it's just a SPAC ETF, and there are SPACs for various types of companies. There are 43 SPACs in this. Probably some percentage are electric vehicles, sure. And I know that Dorian Way likes indexes, and this is a type of an index. I believe in this ETF can be thought of as a mini index, since there are 43 SPACs in here, and it was only created 5 weeks ago, so it's brand new. It only has $5 million in assets right now. And I want to point out a little bit about SPACs, and what I researched about SPACs is that they don't have a great reputation. The SEC is aware that the management companies can get up to 20% of the stock shares once they do the public offering. That's a misaligned incentive. And that two separate entities I didn't have room on the slide, did a study that showed that their studies both concluded that most SPACs underperform the stock market and eventually fall below the IPO price. So as the trend is going up, I personally think I'm bearish on this, but that it might do well at first and then not so well later.
Cool.
That's just, of course. And yeah, that was the last slide for this.
Awesome. Dana, thank you. Thank you so much for putting that together. That was really terrific. It was a great overview of what we know is kind of an interesting place to play. At least from my perspective, guys, I have little bitty positions in some of these companies, and we can go through those. But I think we would all agree that investing for the long term in, conceptually the electronic vehicle market, it's almost like throwing a dart against a barn. You're going to win if you diversify a bundle of them just in long-term investments. But from an options perspective, how do we look at this to make money in the short term? So let's just define short term a little bit. Now, Brian, thanks for taking over. You're going to put up a chart, it looks like, on one of these stocks. Is that right? RMO?
That is correct. So this is the first one that was discussed, and you can see that it was doing pretty much nothing for about a year, or at least a year, and then, as Dana was mentioning, it shot up during the election time, and it shot up to a 38.9 high, and then it just fell out of bed just as fast as it went up, right? But it's still, it's still up quite a bit. But because a lot of these stocks have so much risk to the upside, it's hard for me to short these things because I don't want members to run into some type of Tesla situation where something shoots up. So let's just say, for example, we were deciding that we were going to short it when it hit here. Well, that would have been a really painful move to this point.
Right.
And then you never know when it's going to drop, when it's going to drop out of bed. But eventually, all of these are going to do that, in my opinion. Even Tesla. Don't know when it's going to happen. Just as that was mentioned earlier, you never know how long something's going to stay irrational. So when you play that upside, you want to play it in a way that is it can't be too dangerous for you. You're not going to lose too much if you're going to play something short. But with that said, this is 2 trade ideas, and if you have any, Ernie, you can please share some as well. But
Yep.
The 2 trade ideas I have with this is bullish for this, but limiting the how much you can lose for the most part. This is long-term type of concept, like Dana was talking about. So you would probably want to own this type of trade for the long term. So using options, the first trade is 30 days, and just simply selling a put spread at the 15 delta. Excuse me, at the 15 strike here, and doing it for 72 dollars at least, this mid that this has here. So this is a way you just want to, if you just want to own the shares, you can own it at 15. If it continues to drop, you'll own it at 15 with a cost basis of around 14.30. So that's one of the ways you can play this within the next 30 days. And then if you have to take ownership of the shares, then you can play a long-term doing covered calls. I like that type of strategy. Or you can do a bionic bull and go out 121 days. This is, in my world, this is long dated and a long time from now. So you can buy the 25 call, and you can sell 215 puts. So this is a bionic bull. You're doing it for a credit of 215, and you can get all the upside immediately because you're doing this for credit. So once it goes up, one tick, you're going to be making money because you're doing it for a credit. And then if it shoots up and it goes back to something like something like this 38 or over that, you're going to love yourself based on this type of strategy. And once again, you're doing it for credit. If it goes down, that's fine. You can have a owner. You can take ownership at 15, and then you can keep it long term at that point, right? If you have to take ownership at the 15 strike 121 days from now. If you do not, and it shoots up, you're going to get the benefit of this bionic bull of that long call there. All right, so that's the trade I have on that. Those are the two. Do you have any, Ernie, on this?
Yeah, go to BLNK.
Okay, I have some trade ideas on that too, but I was wondering if you have any on this.
No, I really don't know that one. What I was going to ask you, go to the chart, the chart on that one real quick though. Let me
Which on Blink?
RMO is fine, or Blink, either one of them.
There you go.
Brian,
So
I was gonna ask in RMO, what would you call a no upside risk trade? Like you were talking about you were talking about this week, that a no upside risk, where it could shoot past your span and it wouldn't matter, but that's not taking advantage of the price increase in your pocket, right?
So when I think of no upside risk trades, I'm thinking of you actually doing something short on the call side, and for the most part, and you don't have any risk to that call side. So so that means you would have to collect enough premium to offset the call side if you have max loss on that call side.
Okay.
set up the trade that you had just 1 second ago, so that I just want to look at the buying power and the max.
On the bionic bull?
Yeah.
Okay. All right, this is it right here.
Okay.
So
No. I'm sorry.
Two of these and one of this.
Yeah. No, the other bullish trade that you had on the put. I think it was a put spread, wasn't it?
So the other one, it was just a naked put on this
Oh,
on this.
yeah. Gotcha.
Yeah, it was just a put. It was just a naked put.
Yeah. Set that up for a second. Just a naked put on this.
Okay. And I did that I was doing that at 30 days.
Okay.
Let me clear this really quickly. And at that point, this was the 15 strike that I was looking at, but you could do the 17.5 strike and get obviously a lot more.
Yeah, but so the point that I want to make, because I'll go to Blink after this and show everybody an interesting trade. So that's a profit. That's a 30-day possibility, max profit, $73. Max loss is basically if the company goes out of business in the next 30 days, $1,400 buying power. So you're making 10% on your buying power during that 15-day trade of $700, right?
Mm-hmm.
So now go to the chart real quick.
Okay.
And I think this is going to be the consistent answer for all of these charts, because all of them have kind of a similar pattern to them. They were basically they've been lulling to sleep, or they're brand new forever, and all of a sudden the election happens, everything's got to go green, and they go ballistic. There is no quantitative analysis that you can come up with here on these charts, is it? There's nothing there that would tell you absolutely it's going to go up, absolutely it's going to come down. You're just kind of having to read the emotions of the marketplace, or am I wrong?
I think you're 100% right. I think you're 100% right. You have it's all just the emotion, and that's why I'm afraid to sell something on the call side that can give me a lot of risk, because people can be really emotional, or have that fear of missing out, so it can jump up the way it has. And
so
but
that's a Tesla problem.
Down, it's not gonna go down too. It's not going to go down too much. It might go back down to 950, but I don't think it's going to zero.
Right. Okay. So now put the graph up for Blink, BLNK.
Okay. All right. So if you're not talking, please put your mic on mute.
There we go. Dana. Yeah, I think that was Dana. All right. So here's Blink, same, almost identical pattern, right? Let me give you a thesis here. The thesis is that like literally 2 weeks ago or less. They just raised $200 million at
Mhm.
$41 a share. So
Mhm.
that may or may not, market-wise, give it a floor at the 40s. It may not. It might go down to 30. It might even go down to 20. But there's a good chance over the next, let's just call it 6 months, the company is not going to go out of business. Would that be something that you would agree with or disagree with?
I like this company better. I would agree with that.
All right. So now
Ernie,
go
I like
down.
this chart better too because it was actually starting to go up some before the election, way
Okay.
before the election.
Even though, as Dana pointed out, it's much smaller than its competitor, it has a much smaller footprint, doesn't have as much revenues, but it's got a prettier chart. All right, so now go to the trade tab on TastyWorks. I want to set up a trade, show you guys.
Okay.
So go to Blink. Now where O'Brien thinks 58 to 158 days is a long time for him, I'm going to take him out just a little bit farther. Let's go out to the June 149. So that's 6 months from now. Go out to that
Okay.
right there.
Okay.
Now set up the following trade.
Okay.
Sell, I think, let's see, what did hang on, I have it on my setup already. Okay, buy 122.5 put,
Okay.
22.5 put, and that's a buy, sorry,
Mhm.
buying 122.5 put, and sell two 17.5 puts. Let's see what you get. Now, isn't
Okay.
this interesting?
I'm
So you
getting a
got a
credit of
dollar,
110.
110 on buying power of 485, pretty good return,
Mhm.
although it's a little bit longer dated.
Mhm.
Max loss is 1,140 bucks, which basically says max loss is the company is going to go out of business. It could be also said that if the company's stock price drops to $11.40, that's your actual break-even price on this trade. But at a time when it might be a bearish or bullish position, it might go up or down, the minimum profits you can make is 110. But if that doggone stock drops in the next 6 months, you have an opportunity to make up to $610. Do you like this trade, or doesn't fit your profile? I like that trade.
So I like the trade. I like this trade, Ernie. I just the only negative about this trade, and it's not caveat. It's not really a negative, but what I consider a negative is that you do not. If this has the potential to shoot up the way it has, and let's say it shoots up again, you're not going to benefit as much. You're only going to the most you're going to be able to make if it shoots up is that 110,
Right. I agree. I
and
agree.
and it's a 149-day trade. So that would be in my world, that would be a little frustrating to get 110, but this thing jumps to, I just say it jumps to 100, right?
Okay. Okay. So you have a bias that this stock will probably go higher. It feels like you
Y-
sound to me like you have a bias that it will go higher.
yeah, that's my bias on this, is that I believe the risk reward is it's better to the upside, meaning that you want to try to make the money to the upside on this, um, because it's so much greater. I don't see it, I don't know much about these companies until looking at the research that you guys provided. But based on the chart and just my understanding of this market, and I do believe that we will have autonomous cars, and we will have trucks that are electric trucks, going across the country, and all the supply chains and all that kind of stuff. I do believe that, Uber, Lyft, they're going to have these type of cars as well. Um, so long term, I'm a believer in this. I don't know which companies are going to be the winner, but I think the market doesn't know as well. So they're bidding up all these things right now. So I'd rather take a shot and win on one of these, if that makes sense.
So a bionic bull on a shorter term basis or a longer term basis is something.
Exactly.
Okay.
Exactly.
Which one would it be, longer or shorter term from June? Would you do a bionic bull closer in, or would you do a bionic bull farther out?
So in this case, I didn't do this as a trade idea, but yeah, I would do a bionic bull as a longer trade, a longer dated trade. So for example, let's say it's trading at $45 right now, and you can decide that you can buy the 45, so you get the at the money, and then you have to you would have to maybe sell two of these 30s, right? So your max losses, if it goes out of business, it'd be that 5,900, basically a little over 5,900. Your buying power, you're gonna have to have a bigger account to do this though, because your buying power is gonna be held up. 2,500 is going to be held for at least 149 days, but you get upside immediately if it shoots up, right? And so this is a bionic bull for the long term. I like this one. If you wanted to do a short-term one, you can do that as well. And let's say shorter term, let's say you wanted to see, 58 days to go. You have, if you wanted to go to the 45 as well, basically at the money. And if you sell the 35, which is about $10 cheaper right now, I mean lower, that's two. So this is shorter term. You get the 112. At least within the next 58 days. But if it shoots up within the next 58 days, then you're going to make a lot more. And right now it's saying that it has let's just say a 40% chance to be expire above the 60 strike within the next 58 days. So that can be a pretty good win at that point as well. And then you can just do it all over again. But it's all depends, right? The trade that I came up with this one, the two trades I came up with, the first one is actually 38 days. And I'll show you two. I like the Bionic Bulls one though, Ernie. I just didn't want to I didn't want to have so many different trade ideas and hold people up, but I like that Bionic Bull one quite a bit on this. And then on this one right here, I was thinking about doing a short put spread with short delta. This is something you might like, Dana. And so we have the buying the 43, selling the 42.5. So it's not a big max profit you can get. It's not a lot of money that you're holding, but you would sell the 35 and you would buy the 30, which is not too bad here. So it looks like this. So then I would put it up to like 105, let it come to me a little bit, because the mid, this is pretty wide right there. As you can see, that's pretty wide. Could be like that after, because of the evening. I think it's like that probably normally, and I haven't looked at this stock before. But this, you can see that you're getting $100 after fees and commissions. Your buying power is very, very low. Your max profit is not too much more, about $50 more, or exactly $50 more. But I like this trade if you are trying to just make some money on it in a short period of time, 30 days. But the favorite trade I like, besides that Bionic Bull that we just did, is a covered call, believe it or not, to be able to hold this long term, at least to be able to benefit from it with 100 shares. So if we go here and we click on covered call here on the TastyWorks platform, you have a covered call. Right now it's at the 45.50 strike. I would move it to the 48.50 strike. So I would just move it like this. And then that's a 50% chance it's going to expire above this strike within the next 30 days. So I like this trade, meaning that I have the shares, and it has to go up. It has to go up, a decent amount if it's called away. And if it keeps going down, I have my call spaces is around $40 here, right? So that's where, because I'm getting this credit. So my call space is at 40 and it's trading at almost 45. So you do have some downside protection. And if it shoots up, you can do what you saw me do in Riot a lot, and that's just roll the call out, right? You just buy this call back and you roll it out. And because the risk is more to the upside, those calls and the longer dated calls are still going to be richer. It's going to have a little bit more monies on that. So if I show you that now, let's just say we had this on and we wanted to buy this back, and we bought that, and we went to let's say we went to 58 days in this case, And so we went to 58 days. That's the 48. We can sell the 55 right now for a credit of, $93. That's the mid. So because the upside it's more premium, it's more people are really bullish on this right now based on option pricing and so forth. So
Yeah, and let me just comment that covered call would allow you to buy that stock effectively. The system's only going to hold 50% of the value of that stock. So your $40 basis stock that's currently trading at 45 is only costing you a freeze of $2,000. It's an interesting play. Hey,
yeah.
let's give time for everybody. Let's open it up to anybody that's got comments or questions about some of these trades or some of these stocks or just the industry itself. Are we bullish? Are we bearish?
Well,
Let's just, anybody have a thought?
I had a question. You said that the company would have to go out of business for you to lose your money. And I guess that's when you were going over the puts. Do you mean if the stock was put to you and it went to zero?
Yeah,
Exactly.
that's the absolute worst case. Chapter 11, worthless piece of paper. You own the stock. You've lost the entire investment. Yeah. It's just not likely to happen in the way I was talking about, it's not likely to happen in the next 6 months that they go out of business, especially since they raised $200 million 2 weeks ago. That's my thesis.
Right, and we wouldn't do that anyway in the Dorian way. We would roll it up or roll it out or roll it inside out or.
Yeah. Oh, I haven't heard of rolling inside out. Maybe we got to come up with a new system. O'Brien, what do you think?
I love that.
Yeah, I love that too. I love that too. That's pretty cool, Dan. I like that. We'll come up with something called roll it inside out.
Blink was founded over 20 years ago, just for what it's worth.
Okay. But also, Dan, once the shares are put to you, you can't do the roll inside out and so forth, though.
No. What I'm saying is we wouldn't let it get that far.
Well, we would in this case we would, if we sold a naked put with the purpose of owning the shares at the strike that we sold the naked put, then yeah, we would let it get that far. We would take ownership at that point. But if you sold, but you're 100% correct, Dan, if you sold the put just for speculation, you just wanted the credit and you didn't want to own the shares, then yeah, you would roll that in as many ways as you possibly can not to take ownership.
Right. Agreed.
Okay.
100%. We did a chapter 11 in course 1 on that new trade strategy that Dan has come up with for us. Hey,
Yeah.
let's put GM's chart up there and let's open it up to anybody. Any other comment? But we can talk about anything, but I'm interested in comments on GM as well. But anybody else have a thought, or are you bullish or bearish on some of these stocks right now? I'd like from the gallery here. What do you think?
Can I ask
Sure.
about to you, Ernie and O'Brien, both of you, is there a point to be made about this being an industry full of guesses right now, that you more often trade in stocks with a history and that you are better able to predict and analyze? Is that fair to say that this is much more of a crapshoot with all the companies and you don't know who's going to do what?
Yes, but I'm going to let you answer it as well, Ernie. I don't think GM is a crapshoot, meaning that it's going to be around. So if you're afraid of something, truly having a chance to go out of business, I don't think they're going to let GM go out of business, right? They'll bail it out again and so forth. But right, I think it'll have to be some major situation for it to go out of business, and it, not even a pandemic, because people were still buying cars in a pandemic. So the 2008 situation was, I guess, a lot different when we had financial situation. Financial crisis was a little different than the pandemic. But with that said, I do have a trade, a no upside risk trade to the other Dana regarding GM with 30 days to go. This is how we set up. You would sell in this case, sell the 163, buy the 164. So it's not big. Your max loss on that is 85. So don't love it. Could go higher, but me hit clear here, and then but on the put side, selling the 50, selling the 50 and a half, and then buying the 45 and a half. So let me get there really quickly. Buying the 45 and a half, and you can see that I set it up in a way that you would get at least, I would move it up a little bit to at least 105, and your max loss would be 397. And that would be the buying power that required. It's actually 395 for some reason. It hasn't changed, but anyway, you would get $100 after fees and commissions, which that's what I try to get on all of those upside risks, at least $100. So you don't have any risk to the upside, but this is more speculation, like what Dan was saying. You're not trying to own the shares or anything like that, and if it goes down, then you would adjust it based on that. But you can see that you have no upside risk, and if it falls here, you can make a little bit more. I don't know why that's saying your max profit is only 105, but anyway, let me give you one more trade idea on this. What I really like, this is a bionic bull that similar to the trade that we just did with Ernie here in a second, but I was also going with 149 days, Ernie. But with this one, I like this one so much more on GM because it's 1-to-1 the way we're going to set this up. So if you buy this at the 60, which is, it's still like $4 away from the 60, but you buy it at the 60 and you sell the put at the 55. So you're getting a credit for it, and as you can see here, this is a credit. The buying power that's going to be held initially is the 1568. You have to know that if it falls, you will take ownership at 55, but then you can sell cover calls against it if you want. And then this is a company that you believe is going to be around for some time. And if you're okay with owning it at the strike price of 55 with a cost basis of 54 because you are receiving $100, then I would do this long term to see if GM continues to rocket up the way it has. It hasn't seen this type of move in quite some time, which is interesting, right? And then because we didn't have this on the list, but I thought about Ford, right? So and I looked at Ford, and Ford has done the same thing, right? So Ford is, and it's a stock that's a lot cheaper, but this Ford was in such a tight range for so long. Besides this was obviously irrelevant. I mean, this is something we had to throw out based on the pandemic, but Ford stayed around $9 for so long, $6 to $9. So in this case, if you want to play something a little cheaper, and maybe Ford is going to have to get in the game too. I don't know if you did any research on that, Dana or Ernie, but Ford is a little cheaper.
Ford is interested. Yes.
Okay. All right. So perfect, right? So you go into Ford, and it's a lot cheaper to own it right now. So for example, if you want to just sell something at the money, a put, and it's not a lot that you will receive, but you can see that the buying power requirement is insignificant, right? And your max loss is in most of the accounts that we have in the Dorian Way, that's insignificant, right? Even if you have a small account of 2,000, you can own something. You can own some shares because you got enough, right? You can own those shares at $1,000. So this can be a decent play too, or you can do an amazing bionic bull in this, perhaps, if you think this might have some serious upside in a while. Let's go out for almost a year, right? This is exactly a year, basically 366, right? So let's say you want to that's a 12 strike. Maybe you want to do when you want to buy the call at the 10 right here, right? And then sell an in the money put. So you sell that in the money put. This is the bionic bull here.
Yeah, that's interesting.
It's just structured a little differently, right? You're getting the $25 credit. You're getting the upside immediately because this is going to be these both are going to be in the money when you first do the trade. The put side is in the money, the call side is in the money, but you're betting that Ford in the next year is going to be significantly higher than this. And significantly, that's all relative. I mean, but it's based on the implied volatility right now. Going to 20, it's saying it's only a 19% chance it's going to be above 20. But it's you know, 35% chance it's going to be above the 15, and that's a 70% chance it's going to touch. So excuse me, the 15, and that would be a really big win. Even if it just touched the 15 and you decided to ring the register at that point, you've made some really good capital.
And your max loss is $1,175, but you're going to end up, Ford is not going out of business in the next 366 days. It's just not possible.
Exactly.
I mean, there could be a black swan. I don't know what it could be that would cause them to go out of business, but that's an interesting trade.
Yeah, and it's not requiring too much capital to hold it as well, as you can see there.
Yeah. I mean, my goal on these bionic bulls for the long term, which is, to me, that's long term, even longer term is 730 days. If I can put a position out there that I really like the stock and I want to own the stock, but I don't want any money invested in it, I have put several positions out at 2 years on stocks like this, where I take a credit, I have complete upside, and I don't really think about it much in the short term, because I'm looking long term, thinking, okay, if it shoots up in that 2-year period or 1-year period, I could effectively own that stock for roughly half, just as an example, half of what it might be trading at in 2 years from now, and never have put a dollar into it. And so that's one way I'm looking, Dana, at this marketplace, just because I think in 2 years, all of these stocks are going to be higher than where they are today. So if I can look that long term, that's the way I'm looking at owning some of these positions.
So you would do this buying bull with 730 days. This one works the same kind of setup that we just talked about, Ernie. This one works for a credit as well, with 730 days to go. Gives you a longer period of time for that to work for you.
Yep.
And if it shoots up the way it has, you're gonna love this trade. It's not, once again, it's not requiring too much to hold it, and your max loss is still not very high. But you give it in a long time to work for you.
Yeah, that to me, you set it and forget it, even though it's an option play, because you have so much time left on it. You're going to see granted, you're going to see some volatility in that 2-year period, but theoretically, because this is a marketplace that's got the wind behind it, there's a good chance that it's going to be higher than where it is today in that next 2 years. That's the way I'm thinking about it.
Yeah, I actually like this play. I like it quite a bit. So this is something that a number of us might consider doing. All right, so I did have one more. And then I'll just pass it on, and we can call it. If no one has anything, if you don't have anything else, Ernie, maybe you do.
Nope.
And maybe we have some more questions. If not, we can call it quits after this trade idea here. But I super appreciate Dana coming up with all the information. You and Ernie, this is interesting. Like I've said a few times before, is that I didn't trade stocks for over a decade. The only thing I traded was what you see in the Dorian Way watch list that we primarily provide. So I started trading stocks again this year after the big drop in March, and it's been fun again to trade stocks, and it makes me feel like I missed out over the last 10 years of not being into these stocks. I mean, I followed them to a certain extent, but didn't trade them, right? Didn't do earnings and all that. But that's fine. But basically what I'm trying to say is that I wouldn't have came up with this research because it hasn't been my thing. So, but this is fun, and I want to play some of this stuff, and we probably start playing. I'm going to start, giving a lot of recommendations for this, at least making some money short term on this stuff. So with that said, this one right here, this chart looks very, very similar to all these other ones, right? So if you were just playing them all, you would have won on all of them for a while, right? And then they're all dropped right now, and they're just all taking a pause. It seems similar to like Riot, right? Riot is taking a pause. It's shot. And a number of us has all been in Riot, and a lot of us participated with this major move up, and then the last few days we've seen a decent drop, right? We'll see how tomorrow plays out, but that's why some of these things you have to be okay with a big drop. Volatility, when something is volatile, it doesn't mean it can only go up, right? It certainly can go down, and you have to have the stomach to say, okay, I'm going to stay in it longer because it could shoot up. You know, Tesla has went down quite a bit within this long run, but once again, it went back to all-time high. So the people who were able to, you know, stomach some of that has benefited quite a bit. All right, so looking at this one here, this SBE, I was looking at two different ones, and this is interesting to me. First one, I just to show a different type of trade on it, I was looking at a broken wing butterfly, right? So buying the 35 strike, just you have speculation and you just want to make some money on this within the next 30 days. Buying the 35, selling the 33, and then buying the 20 strike. So it's a broken wing butterfly, so you're selling 2 of the 33s. So it's 1, 2, and 3. Excuse me.
1, 1, 2, 1.
Yes. And that's,
You've learned to
count.
In my head, I'm counting. You guys know I can count to 3 now. All right, so it's 1, 2, and 1. And in this case, I would try to get at least 126 on this. As you can see, this is a decent return on your capital. It's going to require a buying power of 974, but it's only a 30-day trade. You'll take this off once you hit, 50, 75%, and then you move on. So that's a broken wing butterfly on that. But one is an interesting trade on this, and you can do something like this and something else as well, is the poor man's covered call, right? So going out, in this case, you can go out as long as you want, but I just say we go out to the 121, 121 days from now, and you buy the 40 call. Okay, buy the 40 call, and then you go back to the 30 days. And this is a covered calls, means you're selling calls against your position for the into the duration of the 121 days. In this case. So we go to this 30-day, and then what you do is you're going to sell a call higher than the strike that you bought. So we bought at the 40 strike here with the 121 days to go. So we're going to, in this case, I would sell the 44 with 30 days to go. So this is going to be a debit initially, but it's not that much of a debit, right? For the potential upside. If you are bullish on these, and all of these trades for the most part, actually all of these we were bullish on it, except the one that Ernie indicated that was bullish too, right? Because
it had a built-in hedge in it, but it was bullish.
Yes. So this is 385. That's your buying power effect, because that's how much it's going to cost, $385 to do this. But the first month, if it shoots up, you're going to win. If it shoots up past to the 44 or something like that, you're going to win. But if it doesn't, then this will expire, and then you can do it again. You can sell the call again. You can sell it for up to 121 days to this. So, but you do have that upside potential without spending a lot of money. I don't consider 385 a lot of money to spend. And then you have the most you can lose is what you paid, right? Is that 385. So the most you can lose within the next 121 days is $385 on the trade. So I like this poor man cover call on this.
Cool. So do you roll that if it gets close? Is that what you do, or?
Exactly. You can roll this call 100%. You can roll this call the same as what I was talking about earlier, because if this is going up, it's probably the calls are still going to probably be rich, and you just roll it out. So right, so you buy this, and then that's the 44 strike. So you decide that's 30 days. Maybe you go to the 39, and once again you let me clear that. I'm sorry, that was looking wrong. So it's the 30 days. We were at the 44 strike. So we buy back that 44, just acting like we were there. And then we go over to the 58 days because it shot up or whatever the case may be. And so we can go, that was the 44. We can go to the 45, or we can go to the 50. And this 50 is probably going to be that's very close already. You're getting a credit of $3 right here. So that's all you want, right? And if it's only, even though it's only a $3 credit, that's fine. You rolled it for a credit, so it didn't cost you. And now instead of being at the 44 strike that you were at, now you're at the 50 strike. So that means you have another $6 or $600 you can make on the trade because you moved your short
Right.
call further up.
Your long
Okay.
call is still in the money because it's further, it's stated further out.
Exactly.
Yeah, you
So
don't touch the long call.
you don't touch the long call. No,
Right.
you don't touch
Right.
the long call. It's the long
Right.
call is acting like shares. It's acting like shares. So if you actually had shares, you wouldn't touch the shares. Only thing you'd be touching is
Got it.
that short call.
Okay.
Very cool. All right,
Awesome.
so let's do a wrap up here. Any questions or comments about the electronic vehicle sector?
Yeah,
Anybody?
just if you guys prefer ETFs, you might look at ARC. A friend of mine, Carlo, he trades a lot of different types of EVs and tech like that, autonomous tech like laser.
What is it? What's the symbol, Dana?
The one that the ETF I was talking about is I think it's ARKK or AARK. It's ARK Investments. It's an ETF. Yeah, that ETF Innovation. She's
Oh, there it is.
heavily
Okay, perfect.
she's
Okay,
heavily into
awesome.
Tesla and things like that. I think that's the lady that Dana was quoting, but I'm not sure.
Yeah, that's
Okay.
Kathy Wood. That's
Yeah.
Kathy. Or
She's beyond bullish on
That's
on
a
Tesla.
pretty chart. That is a pretty chart. You don't see them too often like that.
should look
That's
I
a
didn't know
pretty
you
chart.
could trade her. Whoops. Yeah, she's it seems she's very well respected and listened to, and you could see why if you hear her speak. You can catch her on YouTube all over the place.
Are there
Okay.
options on that?
No.
It's no options. Okay, I was about to check, but this thing didn't fall very much during the March down move as well. Just like Tesla didn't fall that much.
Our company has different families of funds. So I think they just did, they're just debuting like a SpaceX fund, but they have a couple different ones.
Space fund. Yes, they have a brand new space fund and other funds.
Yeah.
Oh,
Okay,
it
so
looks like it has options.
Yeah, it does have options. Okay.
I was gonna say I think I've traded on it before, but it was when I only could do naked calls, so it wasn't. I couldn't do spreads in that account. So I haven't looked at it since I've been over here though. But
All right,
cool.
so this is
If
another
you
one
like
that I would
ETFs,
I
this
would
is
be
cool.
bullish on, because I'm afraid to be bearish on it, unless you did something that was pretty tight. I mean, if you did something like this, it's not the end of the world if you have to adjust this and all that kind of stuff. But and it's actually, it's pretty rich. That's the 33 delta, obviously. That's why it's so rich on that 5 point.
They're heavily in Tesla,
Okay.
just
All right.
FYI. But they're in a
All
lot
right.
of stuff. But she's very, very bullish.
All right. So if you're very, very bullish on this, then this is 149 days to go. We can do something similar to what we just talked about. It's gonna be expensive to do though. If you did something like this, you have to have a decent sized account, obviously, because this is a $10 credit. But you're super bullish on this as a bionic bull, but it's gonna require $55,000 to do the trade, and obviously your max loss can be almost 15,000. But this is a way to not have to do two contracts. Two puts. But if you did something like this, let's say you went to the 150 and you did two of these kind of things, then that's going to give you a credit. Move it down a little bit more, move it down, and you keep moving it down to a point where that's a debit. All right, so that's a credit. So you can move it down to that point, and this is actually the max potential loss is more, obviously, because you have two puts here, but the buying power effect is less than what that first one I showed. It's about $700 less than the first one I showed. So this is the traditional. This is the This is the normal way we will set up a buy on a pool.
And you effectively own the upside of this stock 100% for a year, or for 149 days in this trade,
Exactly.
with $55 in your pocket, but 4,300 restricted.